What's up, everyone? It's your boy Seven, and woo-wee, I've got a good one for you today. This one is set it, forget it, and boom, 5 months of time, low-cost options, dark pool, perfect chart setup. What am I talking about? Let's go check it out. Okay, guys, we're talking about KHC today. Let's start with the quarterly earnings, 211. So they just reported EPS was 0.8, consensus was 0.74, so they beat by 8%. That's a good start. Earnings are out of the way. Now we have the chart set up that we can play with. So going to dark pool, this is what I want to point out. There's a lot of dark pool activity going on here. Now, because of the zoom, it looks like a pretty good move. This is 32 to 36. If you're trading options, that is a pretty good move. $4 on options can give you a nice return. However, that's not what the dark pool trading is all about. So there's a lot of activity here. We don't know if these are buys or sells. However, I'm going to point out why I'm including this in my analysis here. So all we need to know for now is that there's a lot of dark pool activity going on in this current area. Okay, next I want to look at the daily chart. This is going back for a year. We have clear resistance here, we have clear resistance here, so I drew a shadow box there. You'll see why this comes into play as I pull out to a longer time frame. But before that, Thursday and Friday, we tried to climb. We got stopped at this area here. We did make a new high, but that was only by a few pennies. Then we dropped. However, look where we dropped. This point here that was prior resistance is now holding as support. I would love to see that continue to hold as support, but that's where this shadow box came from. The high over here, the resistance over here, and you can see those levels are still holding out here. Now let's pull out a little bit further. You can see the trade setup is a gap trade setup. So when it gapped down, this shadow box is right where it gaps down to. Then it was resistance here, resistance here, resistance here, resistance here. So this shadow box area is an important area to watch. What I want to see is it break through this area with volume and work on filling this gap here. So now pulling out to a weekly chart, there's a concept in technical analysis I want to point out where support becomes resistance. So we had this support area here and then it bounced. Once we broke through that level, it came back to test that area and it held as resistance before it started dropping. So previous level of support is now acting as resistance. That's going to come into play over here. What I've done here is put the gap level here. This is where it was before it gapped down. And this was a support level over here. So there's something I want to point out about these levels here. So I almost don't want to point this out because I don't want to put a preconceived notion of what's going to happen in your head. But this is kind of a perfect world scenario. We've got this level of prior support, and this is the area where it gapped down. So again, don't put this in your head as concrete. This isn't what I'm saying is going to happen. This would be a perfect scenario here. So let's say we break through this area here, we have our upward movement, and we find some resistance here, which was a prior support becoming resistance. And then maybe we drop down a little bit. We come back to test this area here, which was prior resistance, now becoming support. And then we'd want to see this move up to fill the gap over here. So that's kind of the trade that I'm looking for, is this gap trade fill, possibly moving up to this level here, which was a prior support becoming resistance, possibly a little retrace, and then moving on up to this fill the gap area. Now again, that's not what I'm saying is going to happen. That might be something to look out for. So if you're in this trade and you start seeing it come up here, from 36 to 41.60 is a pretty nice trade. So if you see it coming up here and then rejecting a little bit, depending on your risk tolerance, depending on your trade style, maybe you lock in some gains there. If you have a big enough position, maybe you lock in some gains there and see if it retraces and then moves on up to fill the gap. So there's a few different ways to trade this depending on your risk tolerance and trade style. So this is why I wanted to point out the dark pool level. We've got this incline here, little pullback incline, and then this steep decline. So months and months and months of just a steady decline. And then from this point on, we just have months and months and months of sideways action. Now we did go from 19.99 to 35. If you're trading options, that'll give you a great return. But in general, this has just been going sideways this whole time. So we have this really steep decline from almost $100 to $20, and then just this sideways action where we saw these dark pool transactions taking place. So it looks like on the chart this is bottoming out. It looks like it might want to start turning and making its way back upwards, and this is the level where we saw that dark pool come in. So that's the trade we're looking for. We want to fill this gap here to the upside. We do want to clear the shadow box area, preferably with volume, so we know that it's a strong move and it has the ability to make this move in a continued fashion instead of just kind of a little move here, breakout, and then retracing and it's a false breakout. So we want to see some volume, we want to see some strength, but this is a pretty big gap to fill. We're going to look at the options chain now and see what trade we might take. So here's what I'm looking at with the options contracts. The reason I said this is a low cost trade, there's two trades I'm looking at here. First is April 16th. This is actually not my preferred trade, but if we go to April 16th, the 37.50s, which is just a little bit out of the money, it's trading at 35.79 now. So 37.50 is the first one out of the money. It's about $2 away. These are trading at 69/76. Now, depending on where it opens tomorrow, that's obviously going to change, but we're currently looking at 69/76 with 14,000 in open interest. So a lot of open interest there, low cost. You still have a bunch of time on this one, and it's just barely out of the money to work on filling that gap and maybe going up to that first level of resistance that we had. Now, the preferred trade, this is July 16, so there's plenty of time for this one to fill the gap, plenty of time for it to move up and down and fluctuate a little bit and not have to worry about it. Now, this one doesn't have as much OI here, but what I'm looking at on these two are the 37.50 and the 40s. Now, again, low cost. This is 98 by $1.03. So the $40 area, it's $100 per contract. Again, that will change depending on where KHC opens tomorrow, but you can reasonably expect somewhere around that because if KHC drops, remember, we're going to wait for the setup to present itself again, so these contracts will probably be somewhere around that area. So for $100 a contract or so, we're looking at these $40 calls for July 16th. And why do I like that $40 call? Remember this one here, this prior level of support? If that happens to act as resistance, guess what? That's 41.60. You've got a $40 call. 41.60 is where we might see some trouble, but 36 to 41.60 is a nice move, especially on a $40 call, especially with plenty of time on that trade. And then if it does break through that and go on up to 47.85, those contracts are just going to pay nicely. So there you go, guys. This is a set it, forget it, and boom, let the trade play out. Plenty of time on this one. Perfect chart setup. I love it. Now remember, tomorrow might not be the entry. You've got to let this chart set up and show us when to enter. But keep this one on watch and let me know how you do if you decide to take this one. Boom.